This spreadsheet for a one-bedroom apartment in Evian on Lake Geneva in France will show how it's possible to achieve a potential return of 543% on funds invested over a 20-year period. The process works with a 20-year repayment loan at a fixed rate of 5.65% over the 20 years. The funds amount to a personal contribution of €53,661 plus the annual shortfall before the rental income matches the mortgage repayments of a total of €46,132, which is spread over the 20 years, giving a total contribution amounting to €99,793. The €46,132 is a total shortfall over 20 years before the rental income grows and ultimately the mortgage is paid off. The total invested funds of €99,793 can grow to potentially €541,703 based on an assumed capital growth of 5% per annum, which is keeping in line with inflation. To demonstrate how this investment works, we look at the net of VAT price of the one-bedroom apartment at €165,219. The VAT at 19.6% is an additional €32,383, bringing the VAT inclusive price of the apartment with parking to €197,602. The net price of the furniture for the one-bedroom apartment that accommodates 4 people is €5,485. With the VAT at 19.6%, an additional €1,075 brings the VAT inclusive price for the furniture accommodating 4 people to €6,560. The total net price for the one-bedroom apartment with parking and with furniture is €170,704. The VAT at 19.6%, amounting to €33,458, brings total VAT inclusive price to €204,162. The legal fees at approximately 4%, based on the purchase price, amount to €8,166. So the total price with VAT and with the legal fees amounts to €212,328. However, with this development in Evian, under the Résidence Tourisme scheme, the developer is funding the VAT for the investors. So the investors pay up only to the €178,870, which is the total net price plus the legal fees. The French banks will lend 70% on the €178,870, which amounts to €125,209. The difference between the total net price with legal fees and the mortgage is the €53,661, which is the personal contribution based on the 70% mortgage. So your total personal contribution is €53,661 based on a 20-year mortgage fixed at 5.65%, which is costing €10,678 per annum, which includes life insurance. The guaranteed rental income of €7,682 from the management company Sella under the commercial lease of 11 years and 11 months equates to 4.5% of the total net price with parking and with furniture. The mortgage repayments over 20 years, fixed at 5.65%, are costing €10,678 against your rental income of €7,682, which shows a shortfall of €3,216 for the first year. The rental guarantee of 4.5% is based on the €170,704. Now the VAT and rental income is 5.5%, where the 7,682 with VAT at 5.5% is €8,105. The VAT on the apartment, parking and furniture is at 19.6% compared to the 5.5% of rental income. So the amount of €423 is the additional 5.5% VAT on the rental income that must be reimbursed to the French office once per annum. You are now left with €7,682, which is the 4.5% of the 170,704. The annual fees that must be paid by the investor include accountancy fees of approximately €220 per annum to do your tax returns in France, Non-refundable charges, which comprise public liability fees and syndic fees, which are the recorded minutes of the annual AGM, and the land tax fee from year 3 on, which is the taxe foncière, normally exempt for the first 2 years, subject to the developer issuing the H2 form. The total annual rental income, after all expenses, from year 3 amount to €7,042. From the rental income for the first year, amounting to €7,462, against the mortgage repayments over 20 years fixed at 5.565%, show a shortfall of €3,216 or €268 per month. The amount of €7,462 compared to €7,682 is the accountancy fees taken into account. The second year, we can see the rental income has increased slightly to €7,574, with the rental income index linked at 1.5% to the construction price index, showing an annual shortfall of €3,104, or down to €259 per month. The rental income grows each year with indexation at 1.5% as per the commercial lease. At year 12 of the commercial lease, we can see the rental income has grown to €8,632, which is the length of the first lease. The commercial lease can continue for a further 8 years at the investor's discretion. From a total person contribution of €53,661, plus the annual contribution to meet the mortgage repayments for the duration of the loan, which amounts to a total of €99,793 before the mortgage is paid off, we can see that the property can be worth a potential €541,703, which is in line with inflation at an assumed capital growth of 5% per annum. The balance sheet shows the expenses that can be offset against the rental income. Expenses comprise interest on the mortgage, accountancy fees, non-refundable charges, land tax fee, legal fees, furniture and building depreciation, which show a cumulative loss which can be rolled forward each year and effectively confirm zero income tax for the duration of the investment. In this investment, we have assumed a capital growth of 5% per annum, which is keeping in line with property rising with inflation. After the first year, we can see the property value is increased to €214,370 from the €204,162 as the initial VAT inclusive price. This figure shows that the growth each year is compounded, and under Rule 72, Rule 114 and Rule 144, the apartment will grow and be valued effectively at €541,703 at the 5% growth per annum. Assuming the mortgage is paid off after 20 years, costing a total of €267,220, leaving a net profit of €274,482 after the 20 years. However, the actual profit is greater than €274,482. Your initial personal contribution of €53,661, based on a 70% mortgage at a fixed rate of 5.65% over the 20 years, plus the annual shortfall for the duration of the investment, which is an additional €46,132, bringing the total investment to €99,793. This is where we're showing a potential return of 543% compared to the potential value of €541,703, which is based on the 5% assumed growth per annum. So the €99,793 against this potential value of €541,703 after 20 years is giving a 5.43 times return on your invested funds.